Hi guys, so let's look ahead to the key events and themes this week. Let's start off in New Zealand. We did see the general elections over the weekend where the National Party comfortably beat Labour, but they now need to hold talks with New Zealand First, the party, in order to form a stable government, and it's largely anticipated for them to be able to do so. So we could see a decent amount of Kiwi strength in the early part of the week across the board. However, it could run into some trouble. We do have the RBNZ, so the respective central bank for New Zealand, their rate decision. No change in policy expected this time round. However, I'm looking for them to have quite a dovish rhetoric or tone to their statement to accompany that rate decision. There's a few reasons to note. One, the housing market is still lagging, so prices are falling at the moment. Two, the construction activity is low in New Zealand, and that actually makes up a large percentage of the growth for the country. And three, GDP is lackluster. And allied with those 3 points, we also have the New Zealand dollar, which is strengthening quite at a considerable pace across the board. And if we look at Kiwi dollar, so New Zealand dollar versus the US dollar, that has been rising since September 2015 quite steadily actually. And as we know, New Zealand do not like a strong currency because it does affect their export business. So what I'm looking for them is to have that dovish tone and for them to try and talk down the New Zealand dollar. So it could be in trouble on the back of that. Looking over in Canada then, we do also have the Bank of Canada governor. He will be speaking. As we know, they've really caught the markets off guard on 2 occasions now, hiking outside of market expectations. So the rates are currently 1%, hiked twice in a row now. Markets will be looking further clues as to how aggressive their path of hiking interest rates will be and continuing to tighten policy. We recently saw last week Canadian CPI inflation really picking up, which is good, where the central bank is where it wants to be essentially. A lot of analysts, including myself, are expecting at least one more hike before the end of the year, if not very early 2018. So we could see some continued strength for the Canadian dollar. Obviously, if we look at loonie dollar CAD, as we know, it has had a bit of a pullback, which is quite expected because the move south was quite aggressive. And in terms of this week, depending on the commentary from the Bank of Canada governor, it could continue that move south and go back to test 120 to the downside. Looking over in the United States, a raft of US data in the form of second reading GDP, not expecting much change there. We have US consumer confidence, durable goods and PCE data. The focus really for me is the PCE. As we know, this is the Fed's preferred inflationary measure. Over the last, most of this year, it's been quite weak, quite low for the US, which is not good at all. And we also saw the Fed at their last rate decision, they actually lowered their projections for PCE. So if we do see a higher number, I think this really will cement that hike that markets are expecting before the end of the year. So we should see a decent amount of flow into the US dollar. Even if it's lower, I don't think that's going to change much in terms of market sentiment because the Fed seems set in stone to raise that rate at least one more before the end of the year. And what we're noticing, a lot of central banks, global central banks, are continuing to start to tighten up their policy, despite not every single economic condition warranting them to do so. So look out for potential dollar strength this week. Over in Europe then, we do have ECB President Super Mario Draghi. He will be speaking. Market participants are certainly continue to wait very patiently on the sidelines to see when they're going to start tapering their QE. They haven't done that for the past couple of months where markets were hoping for them to do so. But the general gist that we got from the last statement from Draghi was it could happen in October. Obviously, they're still unhappy of how low or subdued inflation is, and also obviously wages at the moment in the Eurozone. But nevertheless, as I mentioned previously, central banks are generally moving forward to start tightening up their policy. ECB have been ultra easy for quite some time, pumping trillions of stimulus into the market. So we could see some hints from Draghi as to if they're going to do that or not in the October meeting. If they do so, expect the euro to continue to strengthen heading into the October meeting. If we look at euro dollar, I think this week it could want to go up and test towards those highs of 120.60 and beyond. Very lastly then, looking over in the UK, we also have Central Bank Governor, Bank of England's Carney. He will be speaking. What I would say is we're looking for further clarity, as we saw from their last rate decision themselves, heavily hinting at a hike this year. It's imminent really in the coming months or so. So let's get a bit of time frame from Carney on that front, and we could also see some pound strength this week. Other than that, that's it from me. Have a smashing trading week. Thank you.